once you had one or two, three investments, it's best to surround them with other great investments. And even if they're in different areas, they all can feed off one another. And I think we've done a really good job of creating this, maybe one of the first golf holding companies.
Welcome back to The Deal. I'm Jason Kelly alongside Alex Rodriguez. So happy to have with us Hoyt McGarity. He's a buddy, and we were all together sort of weirdly, because as things happen, the first time we were all together, we're only together virtually here. We were together in real life in Doha last year for a big Sportico conference with the Qataris. So it was fun to get to know each other a little bit. Hoyt, you are joining us from St. Andrews because of course, and for those who are only listening to us, Hoyt has the sickest real background, much better than either of ours. So Hoyt, first of all, welcome to the show. Second of all, what the heck are you doing there other than being an awesome golfer?
Yeah, well, first, thank you for having me, both of you. Yeah, I just flew into St. Andrews this morning from Nashville, and I'm here visiting one of our hospitality concepts, T Squared Social, with Tiger and Justin Timberlake. I saw it under construction. I've not seen the finished product, so today was a good day to go see where we're at. We've got a winter under our belt, coming into a nice summer here, so it's good to see it in full action.
Exactly. We're talking to you. It's like 7:00 at night, and you probably could go play 36 holes after this if you
I
wanted to.
know.
It's a good time to be in Scotland.
Yes, absolutely.
So Hoyt, help us, our audience, and Jason and I understand what is 8 a.m. in 2019, 2018, when you guys opened this thing up. Was it born to be basically like a holding company? How many companies do you have in that portfolio? Walk us through that.
I mean, today we have about 15 different golf companies, but in 2018-19, we probably were around six. And we didn't really have a holding company. We owned them individually, and we thought, okay, we need to put these and house them somewhere. And we formed the holding company called 8 a.m. Golf. And since then, we've been collecting brands in the sport that are, best in class. I think we're in every facet of the game, right? We've invested in everything from hospitality to equipment to media to events to travel. I mean, you name it. We're pretty much in everything except for apparel. We sell a lot of apparel through our e-coms, but we don't own an apparel company. I think our closest thing to that might be Painter now that we just bought a position into Painter golf shoes, which will go into apparel. So that was kind of our way of getting into that one. But yeah, we've kind of thought, once you had one or two, three investments, it's best to surround them with other great investments. And even if they're in different areas, they all can feed off one another. And I think we've done a really good job of creating this, maybe one of the first golf holding companies. I don't know. I know people that we own particular assets, but they might not own 15 different ones, right? And we've also are big operators of our business. Let's say of the 11 of the 15, we operate fully and we own 100% of. And then the ones we don't are more on the hospitality side and different things because we definitely needed partners. And it's good to know when you need partners.
So let's stay on that theme right there. So you have now around 15 companies. You can go anywhere in the world of golf. Like, how do you decide what type of business, hospitality, more connected to golf? And then once you source those deals, how do you source them? And then how do you capitalize them?
Yeah, I mean, it's a good question. I would say I start with how we source the deals. I mean, when we first, we're pretty heavy in the equipment space, maybe because that was where my passion lies, right? So, we have Miura Golf, we have True Spec Golf, we have Fairway Jockey, we have McLaren Golf. But we also noticed that more of our brands that were in the premium side seem to hold steady and grow consistently year over year. When I say that, some of our larger brands that speak to millions of people, I feel like there's a little bit more ebbs and flows there in the business model versus the premium side. So when we go out there and look at it, we try to find these unique best in class products that maybe sit a bit more expensive or a bit above the rest, right? And we're pretty particular on that. And how we source them is that honestly, I don't think anyone's looked at more golf companies than us in the last, 10 years. I mean, I spend my days from a venture startup with nothing to a massive multi-billion dollar company. We're looking at it and we get the phone call. So you can't do every deal, right? And, we're not a fund. And so we've been attempted to go down that path. We've been asked to go down that path. I think we built credibility in the space to maybe go to the next step there and raise some capital. But no, we just kind of field them. We very particular on the CEOs, the operating side. Do we gel with them? Do they fit in? And we try to surround our current businesses with stronger businesses, right? And I think once you get consistency and synergies between them all, you start to see the effects of that. And I feel like we're seeing that on a daily basis now.
And to Alex's point, are these are cash deals? Like how do you capitalize them generally?
Mostly cash deals. I mean, you would say, like I said, we own 11 of them. We own 100% of the deal. So we would have purchased them, right? But we're also big believers in the management. So even if we purchase it, we tend to give back to the CEO and the whole corporate structure of that team because we don't want to they're the ones that got it to a place. So you'd want to make sure that they have upside and participating. We're pretty hands-on. I wouldn't say we're a board or a private equity that like pops in, cuts a lot of costs, and then sells it. We very rarely sell a business. We like the operating cash flow, and I think we've done a really good job of creating consistent cash flow across all the entities. And when you add them together, you start to see that, and you can have the ability to do more with them. We did sell a business this last year in Golf Logics. We also know, everything's for sale if you think about it for the right price, and if it's time to exit. And for us, it was a good time to exit that business. So we kind of sent a little message that we do sell things too. It just wasn't at an investment banker level. It was really just me speaking to the group and saying, hey, this is a good fit for you. This is a good fit for us. The price was right. Why do I need an investment banker? And we kind of struck the deal from there. But yeah, I mean, I would say that's probably the best way to explain it.
Yeah.
We're one source of capital, right? And now the companies are producing their own cash flow that we're using that cash flow to buy other companies. And that's kind of how we've operated to this date. Now, like I said, we've been approached every which way. I think 8 a.m. has created its own weird brand. It was supposed to not be known, it's just the holding company. And now it's like, hey, maybe we have our own brand with these events we throw and different things that people are willing to trust us or to offer up capital into future investments. If that's an SPV or if that's us creating a fund, right? We're kind of thinking through all that right now.
And so Hoyt, you mentioned that you got to St. Andrews via Nashville. But those two are
Yeah.
not necessarily always, places that are in sync, or mentioned in the same breath. And yet it makes a lot of sense for you. You guys open a new golf course down there, sort of long in the making, long anticipated. Tell us about that because it's a notable moment, certainly for your company and for your partnership with Justin Timberlake. But also I think for golf, it says something about sort of where we are now. So walk us through that.
Yeah, honestly, I never thought we were going to own a golf course or build one from scratch, right? I mean, that was like the dream if you think about it from growing up in the golf business. I never thought we would get to
I
this
mean, it's
point.
my dream. It's Alex's dream
Yes, I
too, I
mean,
bet.
it's
Just like
everyone's
just own
dream.
a golf course. Yeah.
Yeah. And last week was our first member, and we've only been open just over a month. And I was sitting there, I'm like, wow, I can't believe this actually happened. So this goes back to 21. We've been in the design business. We knew a lot about golf course architecture. We knew a lot about golf. And Nashville was a little starved for golf in general. And then Justin's connections to Tennessee, we kind of found this incredible property off market. In 2001 Memorial Day was when I was there. And now we opened up. And it's a private
Mm.
club. We have about 140-ish members at this moment, mostly national based. I would say 100 of our members are from not Tennessee or Nashville. Um,
Wow.
and we're growing. And honestly, we're only a month in, and it's pretty successful to get to that number. I don't know where we'll cap it out, but we kind of like our number or 150, 160. I mean, most clubs get to around 300, but I think you do it the right way. And we're not in a rush for it.
And Hoy, when you think about building a golf course, that's quite an ambitious, time-consuming resources. Are you thinking about it from the prism of like this is just a great business on its own outside of 8 a.m., or that throws off great cash flow and can grow over time? Or is it a real estate play? Or is it just all of the above, where it's also very complementary to the other portfolio companies?
I think it was more complimentary. I mean, we didn't get into it. We have probably 180 acres extra in real estate. Don't get us wrong. Like we did
Mm.
buy extra acreage that doesn't sit on the course. So it wouldn't be your traditional, like, house on a golf course, right? But we do within a gate have that ability, or we'll build more golf. But honestly, I would hate to say it was a nonprofit because we don't want to lose money doing things, but we knew our numbers really well to be able to say, hey, we can get this thing and get our money back and then use it to for all the other companies we have and events that we have. So we thought it was just a great thing. It was risky. I mean, let's be honest, golf courses are not cheap. Okay, there's nothing about acquiring land, construction, clubhouses, dealing with the cities, states. I mean, nothing about it is easy. Um, so yeah, it was a bit of a headache, but it was more of a passion play. But ultimately, I think the real estate, that if we do decide to trigger it, it pays for it multiple times over. But we don't know what we'll do. I mean, it's just nice to have that. And I think we acquired that extra land after the initial wave, which was a good investment, and it kind of protects it, and it protects the neighborhood as well because it was growing pretty fast. But yeah, I think it was more just because we're not going anywhere, and we'll keep growing, and we have all these incredible brands, and we started realizing we're throwing events around the world or at different places and paying all these prices. We're like, we'll just throw them in Nashville, right? It made more sense. There's nothing wrong. We're only 12 minutes from downtown. It's unbelievable.
Wow.
Like we can't be closer.
Yeah.
So and Nashville, as you know, is growing like crazy, and people love going there. And we're just fortunate to have this incredible property that's so close to downtown.
And Hoyt, it's such a fascinating moment for the business of golf. And, Alex and I talk about it all the time. We talk about playing, we, talk about our game, but we also, talk about the fact that, my 21-year-old son, my 23-year-old son, like they love golf too, and they love it. They love to play it, but their entrance into it and experience with it is totally different. The demos around golf right now are fascinating to me. Tell me about the prism through which you look at that and this sort of like youth boom that seems to be happening, especially in that kind of 20-something demographic.
Yeah, I mean, look, golf is booming, and I was a little nervous because it boomed so much in 2021. I mean, it got out of control there for a bit, and for even looking at companies and the valuations, and everyone was entering the sports, getting a little excited, and I think it tapered off, but it's kind of back again. In a weird way, I'm looking at all of our companies are up, and I'm sitting here going to myself like, all right, I thought we would have tapered out a bit, but we're still seeing growth. Some are up 5%, some are up 25%. So it's good to see that there's in all areas of the sport we're up. I think with the younger generation, what you're seeing now is like, I'm looking at today, I was in T Squared Social, and I'm just looking around. It's lunchtime in St Andrews, Scotland. There's not much going on, and we've got kids in there from the university hitting golf balls in the simulators. They're playing darts. They're just around the sport, having fun with it in a different way, which is something that maybe I wouldn't have done when I was a kid. We didn't even have simulated golf, right? Too much. And this boom in simulated golf is massive, and it's bringing in a whole new wave. And it's a lot less threatening to hit a golf ball 10 feet into a screen than chase it around a golf course, especially as a beginner. And I see this, I travel a lot around the world, and simulated golf, Korea, like Golf Zone in Korea is one of the largest golf companies in the world, and it's literally just in Korea,
Hmm.
right? It has more simulator, they have more locations than Starbucks in Korea,
Wow.
for simulators, and it's a massive multi-billion-dollar company, and it's all indoor golf. And I think you're seeing that boom. It's always been in Asia, and now you're seeing it come here, and I think it's generating this interest level of this younger generation. Obviously, Top Golf, Putt Shack, Puttery, Swingers, Pop Stroke. You have a million miniature golf concepts that have come to the game, and you have the indoor golf that's come to the game. And the areas that we invested was the indoor golf, but Tiger, when we did T Squared, they didn't want it to be just golf. They
Mm-hmm.
wanted it. We have darts and duckpin bowling and golf. Golf was just the common thing that they both loved. Obviously, one was a little better at it than the other, but the other was still good.
Mm.
And and so that was like the thing that brought everyone together. And I hope that keeps going. But I think it's screen. I have to say it's a lot of screen golf. It's not the PGA Tour or Live or anything that. That's all been a lot more drama in the last couple years. Hopefully tapering out, but this puttery, all this miniature golf, it kind of gets you hooked. And you guys play golf, so it's like once you get going, then you're like, oh,
Oh
I want to
God.
go to the grass with it, and then you become
Yeah.
addicted to it.
Totally. I mean,
So
I am a full-on golf sicko, as Alex knows. I mean, Alex, I don't know if we've ever really talked about this on air, but like, what's your relationship with? I mean, you didn't play as a kid. You started playing as an adult. Like, how did you come to it?
Yeah, so when I was in Seattle as a teenager in early 20s, I would see Griffey and a lot of our Jay Buhner, a lot of our pitchers would play golf. And I was like, hey, I'm getting a little FOMO here. Like, I want to play a little golf. And I started playing, and my routine for 15 years was this. I would get back home sometime in October, November, and I would play like 5 days a week. I would take my handicap down to about 10 or 13, and then I would go back and redo it again. I would start at 17 and go back. And by the time I had to go to spring training, I could never break 10. And that got a little frustrating because I had to fight my baseball swing. But to Hoyt's point, like I just fell in love with the game and I've been in love ever since.
Yeah. And so, I mean, Hoyt, it's interesting you mentioned the vibes around golf right now. You kind of see the tension a little bit, right? You know, you sort of see the old heads, as it were, who, you know, were like very much the tuck in your shirt, wear a belt, no music, and then you have a bunch of bros, you know, screaming around in their golf carts, playing loud music. How do you sort of serve both simultaneously from a growing the 8 a.m. golf portfolio perspective?
Yeah, I mean, that's a good point because there's very different golf courses, and it's come a long way. I mean, look, I was never a member at a golf course. I grew up in the Hamptons, and I caddied at every golf course just to have access to a golf course. There wasn't even a public, well, there's a par three course, but there wasn't really a public golf course I could play within 40 minutes of where I lived, which made it very difficult. So my only access was to Maidstones and Shinnecock's and Nationals, which are unbelievable golf courses, but provide a particular experience, right? And that was it wasn't very accessible, right? I mean, unless you had the money and you were a member or you had the pull to get in, what do you do? Why would you enter? Why would you go play golf without simulated golf, etc.? As it getting younger, I just think it's becoming culturally more laid back. You see it from the apparel lines that are out there, from
Yeah.
Malvin to all these new things that are coming. We're seeing it in Painter right now. This more of a lifestyle, more fun, more of a hang environment. And I think we can only translate it to our companies or not necessarily all that, but we do notice from like golf.com and Golf Magazine, all of the YouTube, all of the content is a lot more driven to a younger generation and fun. We still have the content for the older generation. We still have a magazine, right? That caters to a particular group. But we know the future was in this new wave and making it fun. At Bounty Club, it was interesting. Where do we lie, right? And we had to decide as a club. We're like, hey, it wasn't too hard to decide with Justin Nashville and thinking, okay, well, we want a world class championship golf course, but we want it to be fun. And the one thing Justin always preached to us was, listen, you can have a great golf course, but a terrible hang, and you got a
Yeah.
great golf course. Because you can have an okay golf course, but have an incredible hang, and your people, they will come there, be there, have fun with it. And if you hit both, you've done really well, right? Special place. And so we actually that struck, and I was like, you know what? Whisper Rocks of the world, like all these great clubs, they have a great hang first. So we focus on what we can control, and that was the hang. I think it's the only thing you can control.
I want to just go back and double click on one quick question. When you look at, is there certain metrics that you look when you buy a business? Obviously, it has to be related with golf some sort. When you think about it, does it have to have like at least $5 or $10 million of revenue? Are you thinking about purchasing revenue multiples or EBITDA multiples? And is it something you won't pay? If it's over 10 times multiple of EBITDA, would you say that's too rich for us? Or is it dependent on the deal and the growth and everything else in between?
Well, our chairman, Howard Milstein's pretty strict on particular things. We've always been much more of a cash flowing. We don't mind if it, first of all, some of it's part of a bank. So you're like always love cash flow and what you can lend against, et cetera, and convertible notes and that type of structure. But you can be making $100,000 EBITDA. You can be making $5 million EBITDA. We just knew we could add to it if we were able to buy it. So yes, unfortunately, we don't have a venture arm really. We probably should. We're just not structured for it, so we pass on a lot of deals. We might flag them and say, hey, keep an eye on these deals because we liked this CEO, but it wasn't for us. So we're much more looking for businesses that are existing cash flow, best in class brands of any size. I would say our sweet spots, yeah, if you could be in the range from 2 to 10 million EBITDA, we love that because we know we could bring the most value. If do we see much larger deals? Of course. But then, Jason, you and I spoke about this in Doha. It was just trickier for us. Again, I'm one source of capital for me to go buy something that's $200-300 million. I better not miss, right? And you better love that deal. I think that we passed on a lot of deals that become very successful when we knew they were great deals. We just weren't structurally set up for that, and that's what I think the next wave is. And we've created that reputation and brand that, if we did have capital behind us, like no one does better due diligence in the sport of golf than us. We might as well be like a McKenzie almost, or a group like that, and just be hired to go do the due diligence before you go buy one of the big. We'll know the CEO, we'll know every employee, we'll know the pros and cons of it. And unfortunately, they're not all great in golf. So you have to be particular. They might look great. It goes to other businesses too, but it's they making money is tough, right? Like, and I've noticed that lots of revenue. I see the apparel lines. I never understand it because that trades off. It has to trade off of multiple revenue. I never could get that in my head where I'm like, okay, so you sell 100 million, but you make no money. I don't even know how that's possible, but let's talk about it. And then you're worth 300 million. I'm like,
Right.
okay. So I don't live in that world. I just want to see a proof in it. And that normally comes with good operating teams because they've gotten it to a place of cash flowing. We don't have too many revenue-based business. We have one that lives on the line of like, we have a company called fairwayjockey.com, which is just this website, and we're on pace to sell $20 million this year in like custom golf clubs online, where you can go on and build any set of golf clubs with any shaft, any specs, and we're the only website in the world that offers this, which is another weird thing to say, that we do not have one competitor in the entire space. I don't think anyone would be crazy enough to have the build shop and the things that we have already in place. But when we first bought it, we bought it to kind of shelve it because it was a competitor and it could hurt one of our other operating businesses. Then we kind of let it loose, and this thing's going to do $20 million. I spend 10 grand a month on marketing. I don't even spend money on marketing. We also now are like, maybe we should just get to 40, 50. We're not looking at it as, okay, it breaks even, it makes a few $1,000,000. Who cares? Like, this thing's going so fast. And we've gone from 9 to 20 in 2 years.
Wow.
Right. And I'm like, all right, this can go to 40 to 50 fairly quickly. So why don't we let this one run a little bit, and we'll spend extra cash on it, and we won't look at the bottom line. Then you could pull that back at a certain volume at $50 million. You start stripping out those costs. Next thing you know, you could make it very successful. But that's probably the only time we live in that world. Howard would, be all over me on that one, but he'd rather be small and make money. I get it. That's the goal here, is like, make these businesses profitable and run them like real businesses, because a lot of golf companies are more of a friends and family, like, cool
Yeah.
deal, and they're not structurally run like companies. And I think that's what we were like, how can we help these people bring that structure to them? I think that's
Yeah.
where we do a really good job.
And so, Hoyt, as we wrap up here, I mean, I guess one sort of existential question I have for you is, we have experienced this boom, a boom that didn't really, as you said earlier in the conversation, didn't really slow down. And, the content is growing, the audience is growing, even, and maybe because of some of the live and PGA drama, and you've got some good storylines on the professional level, people are super into it. What's sort of lurking out there that could sort of dent golf? Because, 10 years ago, we wouldn't be talking to you. Like, we wouldn't be having
Yeah.
this conversation because your company wouldn't have existed and golf was in what looked like terminal decline. And now here we are. So what are the things that could get in the way of this continuing on?
Well, I would say, honestly, I think it's coming to an end. It's probably the tours, right? If you have what's happening in the sport of golf happen for too long, you start to lose fans, you start to lose people. It's all about money, 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 which is all sports, but it was taking over hours, right? And then you just started getting upset with it, and then people were deterred from it. Normally it wouldn't bother me, but when we start seeing it trickle down into the world of golf, now it bothers me. That's a problem, right? It was just so negative for 5 years. I'm not even sure how the sport is still so healthy, considering
Yeah.
it. That's where I was a little nervous in 23, 24, 20. Like, it was like we were going the other way a little bit. You could see it. I think it corrected itself in 25 in a big way into 26, but there was a time there I was a little nervous because it was trickling down to our businesses, which means if I'm feeling it, TaylorMade, everyone was feeling it, right? So I think I don't see any others. I mean, yeah, you could say like the workforce. You could say it in any business, AI, what's going to happen here, like how many employees. I think businesses, I'm not even sure how businesses are going to be traded soon if you only have, your EBITDA margin could go from 20 to 50% suddenly because you use technology. It's all going to change. And I think we look at it every day, and I think golf tends to be the last one to react to any of those things. We for sure don't want to be that group. We'd like to be all over that. But that could have an effect too. I think there's too many people in the PGA of America, all these young pros looking for jobs,
Yeah.
but there's no jobs. There's not that many jobs versus how many people are in those programs. It makes me a little nervous, where they have this education, where are they going to go use their tools to be successful? And sometimes I pinch myself. I'm very fortunate. I mean, like I said, from caddying to starting a club fitting company to being where I am today. I mean, sometimes I forget I'm in the sport of golf, and I'm like, hey, Hoyt, this is pretty good. Like, remember where you are. And so I check.
So, Hoy, one final question for me, because I know we're coming up on some time. The question that I have, you talked about the future and really not knowing what's going on in the future, a little bit the past and where we've been. I guess my question is, what's next? In the next 3 to 5 years, if I was to say forecast this for me, are you going to go from 15 companies to 30 as you grow your portfolio? Are you maybe selling to a private equity group? Are you going IPO? What's next for this company?
Well, we just acquired 3 businesses in the last like 4 months, so we really haven't slowed down, or partnered up with different businesses and made investments. I don't see us slowing down. As long as we're cash flowing and doing the right things, we will keep growing. I think that we will bring in partners. I no doubt in my mind that that's probably the next step. With like I said, we built that respect, and you got to prove it first. And now we have something that we proved, and I think it's a great front running brand, quite frankly. Now it has this respect that if it had real capital, we have real capital, but it's like, another level of capital. I think there's a lot of people, we get approached all the time, from PE firms to celebrity, all sorts of people coming to us like, how do we get involved in this world, right? So I think that I want to see growth. I have no intentions to slow down. I'm young. Howard's been great to me. His son Michael is now the co-CEO of the bank, and he's young like I am, and he's hungry. So there's no real slowing down as long as they're good businesses. I think we have to have discipline. We can't just get, crazy, but like, you have to have discipline. I think if we keep doing that, we'll keep growing.
All right. Well, we're gonna knock on your door at Bounty Club at some point and just
Yeah,
like
we'll
try
come
and get
down
around
anytime you
in.
want. Just don't come in August. It's a little hot there. Stay away
Yeah,
in the summer.
exactly. That's I growing up in the South, I know better than to go much south of New York during the summertime. So, Hoyt, good luck in St. Andrews. Good luck with all your travels. Great to spend some time with you. We love the company, and just keep on trucking. Love to see you.
Yeah, no, I appreciate you both having me on. That was great.